All right, guys and gals, Crypto Kurt here with yet another review. We're going to be looking at Salt lending today. And full disclosure, I am not a financial advisor, and this is not financial advice. This should be construed or used for educational and entertainment purposes only. Also, full disclosure, I do own Salt tokens, so if the token value goes up, I will benefit from that increase in value. Okay, so having said that, I want to go through why I'm excited about this platform and look at some of the problems it's going to solve for current crypto owners, specifically those people who got into this a long time ago and actually have quite a bit of holdings, wealth created from the cryptos, but they're either having trouble cashing it out or they don't want to create a taxable event by cashing it out. Or the third scenario is, I was watching a video earlier today. A guy went to buy a car in the U.S. and he could have bought the car with Bitcoin. He could have liquidated enough. He had enough Bitcoin to go buy the car cash, but the car they gave him the car with 0% financing. So he's like, why the hell should I drop 7 Bitcoin right now to go pay cash for the car when 5 years or 3 years from now, after the end of the loan, Bitcoin could be worth quadruple or 10 times or who knows? So this is, I think, this perfect example of how this platform is going to bring a financial solution to those of us who want to be able to take advantage of our cryptos, leverage our cryptos into cash, but then keep those cryptos available for its own natural growth. All right, guys, so this is the website. Look, you can come to the website and check it out. It's pretty clean. But what I want to do today was dive straight into the white paper and get into some of the specifics. Okay, so what is SALT? So blockchain-backed loans. And it's interesting, they actually have trademarked this phrase. So I think that's interesting. So blockchain-backed loan. What is a blockchain-backed loan? A blockchain-backed loan is money borrowed for any kind of personal or business use, such as making a big purchase, paying off credit card debt, investing in home improvements, taking a vacation, or paying for business expenses. The loan is collateralized by a blockchain asset such as Bitcoin. Just to read further, SALT wants to make things simple for its members. There are no origination fees, closing costs, or prepayment penalties on the fixed-rate term loans arranged through the SALT platform. Members may elect at any time to pay off their loans early at no additional cost to them. This is in strong contrast to terms often offered by conventional lenders. Typically, conventional loans are accompanied by a myriad of itemized fees, such as upfront origination fees, which can exceed 5% of the loan balance, monthly servicing fees that are paid by the borrower on top of the monthly payments to the lender. SALT has opted for a simple model where fees charged to borrowers are rolled into an annual membership to promote transparency and fairness. Now, guys, I've got a 4-year business degree with a major in banking and finance and a minor in economics. So a lot of this stuff makes really good sense to me, but I appreciate the fact that a lot of people are not money-minded or math-minded and certainly don't have a lot of experience with finance. So here's a nice, pretty picture. Again, this is in the white paper. How is this system going to work? Okay, so lenders post terms which they are willing to lend. So someone who has cash comes into the back end of the system and says, I'm willing to lend you money. All right. The member, you who want to use your crypto, you select the loan terms that best fit your needs. Lenders then commit the cash funds to the loan. The member posts their collateral blockchain asset into a multi-signature smart contract. Funds are deposited directly into the member's bank account. So once you put in your collateral, once your collateral is securely stored during the loan creation process, then you get money directly into your bank account. The member, you, then makes monthly payments on the loan, and as soon as the loan is repaid, the member's blockchain assets are returned. Okay, guys, so again, pretty straightforward. You come in here and you purchase a membership. We're going to look at that in just a minute. You create a loan request. Basically, you say, you want to, and we're going to look at that as well as how that's going to look. Then someone approves and says, I'm willing to lend to you, put your Bitcoin up, and then money comes into your bank account, and then again, you start paying that back. So it's no different than a traditional loan in any sense of the word, except that you don't have to worry about credit score, you don't have to worry about work history, you don't have to worry about, are you employed or unemployed? The only thing that this system cares about is that you have cryptos to put up as collateral. That's it, right? Doesn't matter where you live, how old you are, or anything. So, some of these 15-year-old crypto billionaires are going to be laughing because they'll be able to actually cash out, right? And still keep their crypto in their own possession. All right, so another pretty picture. This is just a screenshot of what the platform is going to look like. These numbers, they clearly state, are not for real. They don't make sense, so it doesn't really matter. But the concept here is, you would log into the back end of your system. And here's an example. I'm creating a loan. So you're saying, how much do you want to loan? It's a drag and drop thing. It's going to automatically assign some stuff. You're going to put in an interest rate that you want to pay. And then it's calculating what your payment will be. And then over here, it's basically just showing, what you possibly could look like. Your account status, your loan amount, your interest, where are you at with the loan, et cetera, et cetera. So at a glance, you can just see what's happening in your account. All right. Now, to get an account, you have to purchase membership, okay? Purchasing a membership means that you're purchasing one of the SALT member tokens. Now, they just finished the ICO for the tokens, and they did it in a very interesting way I've never seen before. It was tiered pricing. So the first price, the first allotment was sold at $1.50. Then they sold it at $3, then at $5, then at $7.50. The white paper says that they are going to retail the SALT tokens for $10 US once the ICO was closed. But the ICO was so popular, I know that they did offer another allotment at the $12.50 range. Okay? Now, for the purpose of making this video and keeping the money and the math easy, let's work with what the white paper says and says that they're going to sell memberships for $300. A token for $10. You can see that the basic membership, which gives you access to term financing, access up to $10,000 in loans, you're getting it in USD, and you're borrowing from anywhere from 3 to 24 months. That's going to cost you 1 SALT token per year. So again, the concept there is the company is happy to accept $10 as a fee for your membership for the first year. A premier membership offers you term financing and line of credit. The difference between term financing and line of credit is basically term financing means you get the loan and the money's dumped into your account and you pay it back. Line of credit means basically that you get access to a line of credit when you need it. So it's like a credit card. Your credit card can sit there and you only swipe it when you actually go to the store and need it. So you only draw the money out when it's physically required. So there's 2 slightly different ways to set this up. Access up to $100,000 in loans. Multiple currency access. Now this is not currently available. If you read the roadmap on the white paper, this is going to happen over the next few quarters. You get access to from 1 hour lending to 36-month terms. So again, you day traders out there, you can go borrow money for an hour. And that's going to cost you 30 SALT per year. So if we do the same math, if we assume $10 per SALT token, that means they're charging you $300 per year to get access as a member to access the premier level account. Now, some of you may say, wow, that's expensive. Well, I just got here in Australia, the end of the financial year for individuals is June. So July is the first month of the fiscal year. And I just got my July credit card bill. And they, of course, had their annual fees on that bill. And so one credit card, they charged me $150 for the annual fee. They charged me $55 for the frequent flyer access or access to the program. And then they also charge me $2 per month because I want a paper, a paper report sent to me. So what's that? $150. So I'm paying $224 a year in fees just to have one credit card. So that's just giving you an example. I'm sure many of you have credit cards that don't charge fees. They're exorbitant here in Australia, and they ping you everywhere they can. So again, if you're in America and you can get free credit cards, good on you. But that's not the case down here. So that's just a good example of the kind of fees that. So I don't think, long story short, I don't think $300 is an expensive fee to get access to this kind of service. Okay, and then for enterprise users. basically you want over 100,000, you're going to create kind of your own customized solution. You're going to have to reach out to Salt, and they're going to give you a customized solution and a customized fee. Now, I was asked a question on my previous video where I talked about the ICO, and the individual saying, okay, well, what if the value of Salt in the marketplace increases? Okay, so Salt Lending is going to sell them for theoretically $10. They're probably going to be more than that because they're already selling them at $12.50. But again, using this math, they are currently happy to accept $300 worth of value worth of Salt for the membership, and they're happy to accept $10 worth of value for this membership. And the question was, what if the value of Salt goes up to $100? All of a sudden, then, theoretically, the cost of this, the fee to become a member is now $3,000 because it would cost you, that much money to go buy the 30 Salt, right, at $100 a pop. And then they took the example even further and said, what if it goes to $1,000? And now it's going to cost me $30,000 to get access to this platform. Okay, my first answer is, well, that's why you should have bought the ICOs. But I know that's a cheeky answer and not what you want to hear. I'm just going to scroll down here and just show you some fine print that they have. Okay, select products and services such as hardware devices are available for purchase at additional cost. Loan products available at launch are subject to lender-determined product offerings. Salt Lending anticipates that only Bitcoin collateralized US dollar denominated products will initially be available. And here's the important part. Annual membership fees are subject to regular market-based price adjustments. So guys, if you think about it, this platform, it doesn't help this platform to have the membership fee so expensive that people can't use it, right? They want people to use the platform. The more people that are using the platform, the more these guys are going to make because they're pulling salts off of you as a member. So they're able to pull that salt back into their inventory, which they can then turn right back around and sell back out to new members. So my guess is, and this is an assumption, and this is not stated here in this white paper, my assumption is that they will reduce the prices of the memberships if the value of the tokens go up such that it becomes more than the 10 and 300. Now, I might actually reach out to these guys and ask them the question. This is one of the best well-written white papers I've seen to date. But as with all white papers, not every scenario in question has been discussed. So again, I'm making the assumption there, but my guess is they would adjust the prices down to make it available because they want more people to use the platform. All right, this is going to end up being a little bit of a long video, but you know what? I want to just knock it all out in one. There's just, finance is finance, and sometimes it takes a little while to explain what this is all about. And again, I'm trying to make it as easy to understand as possible. So you're going to have to over-collateralize your loan. What does that mean? So if you want to borrow, and this is an example, if you want to borrow $100,000 at a 10% interest rate, you're going to have 12 scheduled payments of $879, okay? At origination, which means when you set up the loan, the $100,000 loan balance, which you will receive in cash, will be secured with $125,000 of Bitcoin, which is posted in a multi-signature wallet as collateral, okay? So that is to cover their ass if the price of Bitcoin goes down. This is why banks care about your credit score. This is why banks care about how much money you make, because they want to know that if they're going to give you money, what's the best chance that you're going to pay them back. So that's why they care about this stuff. These guys only care about the crypto. What they care about is the value of the underlying crypto, okay? This goes on to say depreciation. What happens if the underlying collateral goes down in value? So there's going to be two options that you have. One is they're going to call you and say, hey, you need to give us some more Bitcoin. Then they'll tell you exactly how much you need to add back into the platform to maintain the ratio that they want to keep it at, which is 80% or 25%, a loan-to-value ratio of 80% or an over-collateralization level of 25%. If you don't respond or if you don't make the payment or the additional input of Bitcoin, then what they do is they sell off some of your collateral. And this all happens automatically. The smart contract has something called an oracle, which actually manages all this. And the paper goes into some detail about what they're doing to try to make sure that if they do liquidate, that they get you the best price and all that good stuff. So just understand that you're going to put more money in than you want to borrow. And if the value of Bitcoin goes down, you might have to put some more Bitcoin in. Now, on the other side of that, if the value of Bitcoin goes up, you're still going to get your original Bitcoin back at the end of the loan. So you're still getting your capital gain. That's the whole beauty of this system. So if it goes down, you just have to give them more. If it goes up, you're still laughing because you still own the Bitcoin. And then thirdly, if you default, if you flat out stop making payments, they're going to sell all of your collateral, up to 100% of it, to get the original loan back. And then you still will have your 25% over collateralization that you can get back. Okay? So again, if you just quit making payments, they're going to sell all your collateral, and that's going to happen automatically. Now, this does say they use methods like email and SMS to contact people. This will all be directed and driven by your access to the platform. So you're going to want to make sure, obviously, that you're maintaining and monitoring those communications, especially once you go into a live loan. Just quickly, for you techno geeks, just to look at the technology. So the SALT memberships exist on the Ethereum blockchain, and loan collateral is recorded on its native blockchain. SALT Secured Automatic Lending Technology, and I think that was interesting that SALT is an acronym for Secured Automatic Lending Technology, is a protocol and asset agnostic architecture. Any blockchain asset, including those that exist on permissioned distributed ledgers, can be used as collateral and managed by our smart contracts. Our SALT Oracle creates multi-signature smart contracts on the collateral's native blockchain or an external blockchain, case depending. Any external transfer of the collateral, whether it be a liquidation event or a reversion to the borrower, will occur on the blockchain. So once again, it's all secure. It's all blockchain technology. So you have a level of anonymity. You have some assurance that, again, it lives on the blockchain and that your collateral is not going to disappear on you. And that's really the biggest thing that we have to worry about. Okay, so once again, the ICO is over. The coins have not hit the market yet. There is no index that's actually trading them yet that I'm aware of, that I checked as of today. If someone has come across them, please let us all know. There is a link below in the description box to go become a member of SALT. And again, full disclosure, they do have a membership referral program. So if once you create a membership, you get a referral link, and you can see how this works. You can send the link around to friends. Basically, for each new referred user that chooses to purchase 30 memberships, and it says in the fine print later on, 30 memberships within 60 days, SALT will credit the referring member's account with 1 extra membership. So if I refer someone and they buy 30 in 60 days, I get 1 extra SALT token. They also state in the small print that the 30 memberships do not have to be purchased in one purchase. They can be purchased over time over that 60-day period. So again, full disclosure, if you go through that link, you'll be signing up under my referral program, and if you buy 30 salts, I'll actually get a free salt. So thank you very much for watching and supporting me in the channel. I think that's pretty much it. So again, I think this is going to generate probably heaps of questions. I'll do my best to answer them as succinctly as I can. But remember, guys, I'm not part of the SALT token team. I am not support for the SALT token team. And if you guys ask me really squirrely questions, I'm just going to refer you back to SALT. Because, as I said, there are a number of scenarios, potential scenarios, that are not covered in the white paper. And I'm sure they've thought them through on the back end, but they just haven't thought them through to put them into the actual white paper, because the number of scenarios that could crop up are just so wide anyway. All right, guys, so once again, Crypto Kurt here. This is the first day of the rest of your life. There's some crazy money to be made in this industry. I will come down here real quick and show you this number. The future of blockchains, cash equities, and repo transactions. I don't know where they're pulling this number from, but if that's true worldwide, it's $1,000 trillion. So it's a huge market. And everyone on this channel has probably borrowed money or used a credit card at some point in their life. So everyone knows how this works and what credit actually means. On an aside, they are going to offer a credit card. There's going to be other services they're going to roll out over time. So again, this is early days for these guys, but I'm really excited about the platform. I'm really excited about the opportunity to make income on the side and keep my cryptos. How do I make income on the side? I put my crypto in here, I pull the money out, then I take that money and go invest in more cryptos. So that's my goal. That's how I'm going to play this game, right? Low interest loans, and go buy some more cryptos. Do it intelligently. pay the loan off as soon as I can, and just keep doing that. Rinse and repeat, rinse and repeat, rinse and repeat. All right, guys, once again, I hope this is helpful and helps everyone understand what this thing is and how it works. And Crypto Kurt out.